Hi, Bill. Listen, first of all, welcome to Equity Story. Thanks for joining the show, and it's a real honor to have you on board. And hopefully, we can have a good year together and make some money. Um, what I would say at the moment, first of all, just look at. I'll go from the bottom to the top. Tox is a great story. We like it. A 3-year growth story. It's growing its earnings. It's got a good dividend. And what we feel passionate about Equity Story, if you've got a good company, it's got diversified earnings. Um, and it's got growth over time. The share price should do well as well. The fact is, as well, this is slightly aligned to a little bit of a boom we could get in the resources sector. I think will only set in sort of good light for the next 6, 7, or 8 months going ahead. We do like the story, and I think it won't be long, hopefully, before we start seeing the story start trending above those trend lines and starting to look pretty good. Obviously, Telstra, I think you're out of that one, aren't you? I'm just looking here on the. But again, as you can see, it broke that trend. $5. You want to, it looked really ugly. For me, this looks like it's going a lot lower. I do understand. I do believe they're going to have issues paying the big dividends they're paying at the moment in a few years. So potentially, this could be quite a nice sort of long move down. So I think you're well out of Telstra, and I certainly wouldn't be trying to buy this. I wouldn't be trying to pick bottoms in it either. Have a look at TGA. Again, I'm not sort of. It's not one of the stocks I've had a look at fundamentally recently. At the moment, just simply from a charting point of view, it looks very sideways. It's obviously hit a bit of resistance up there. You see on that 200-day, it's come down and sort of finding a little bit of support here. This could just range trade sideways for a while. Possibly if it went back up to this sort of. How did it go? That 196 level, even 195, I might be getting out of it. And certainly if it broke that sort of 167 level on a weekly basis, or sorry, 165, you could say give yourself a little bit of room, say 160. It could go back down to this sort of 150. I don't really, to be honest, it doesn't set me on fire, and I think there's better stories out there. As a little bit with sort of next DC, it's quite an interesting one. We actually have been in this company, this 3-year growth story, and we liked it, and we took profits, and then it carried on running a little bit higher. I think the issue with it for us at the moment is broken that long-term trend line, and yes, fundamentally, I think if we're in this around here, I could just hold it around here. I mean, I could wear it down a little bit more. But you really want to see this stock getting back over that 338. You really want it over here. I mean, the week's not over yet, and this has just been a pretty ugly week so far for the stock. So hopefully by the end of this week, it can get over. It can be around that sort of 338 level, and start finding some support. And I think if it can do that and then turn up, it'd be fine. But certainly, fundamentally, I think it's obviously got a great growth. It's a great growth story at the moment. Technically, there's certainly some issues with it. NUF. Let's get this looks very good. Again, this is not one that I've really been following recently on a fundamental view, but again, pretty strong trend line. And again, what you want to see is definitely holding sort of that blue happy line, we like to call it. But this is really bullish. It's holding that sort of really 20-day moving average, which is a pretty sort of bullish trend line. And again, nice little sort of crucifix sign there. I mean, this looks absolutely fine. So I'd only get really sort of concerned with this company if it broke on a weekly basis below that 440 level. Then it could act as support. It could go down a lot further. But certainly from a technical point of view, I think this is absolutely looking fine. And even if you look on that short-term chart, again, it is quite volatile, but again, it's sort of holding nicely above that sort of, or hugging that sort of blue trend line, so it doesn't look too bad at all. So well done there. I think it looks absolutely fine. MTR, we really like this story. We've actually been looking to put this on as a 3-year growth. Again, it really finds a lot of support around $3. This is great. I think it's a good company. it had a really strong run. I think it just ran a little bit too hard, and then got sold. Got sold down. I think there was a little bit of scare on this company that the BNB website and people just obviously going to people's houses and people renting rooms. It's going to affect the hotels. I can't see that. I can't imagine Chinese people going to stay with Mr. and Mrs. Smith down in the middle of Manly. It's not what they like. This company is, I think, really aligned to the Chinese growth story, and as Chinese tourism booms over the next 3 or 4 years, I think Mantra is actually a very, very good place, a very, very good company to play the story in. No, we really like it. I would like to see it, back above that sort of 352 level. But no, we think it's a really good, solid company, and certainly, over the long term, I think it'll do very, very well. As MIGME, now, you're a brave man. You've come down here. You bought MIGME pick a bottom. So if this works for you, obviously, it's going to be a big winner for you. But the issue, the issue MIGME's had is it's actually been an incredibly successful company over the last 2 years. They've gone from 5 million to 37 million. They're growing their revenue. I don't think the Australian market really get MIGME, and potentially for me, this is obviously a high-risk investment. But generally speaking, these type of companies are worth about 10 times their revenue, and we believe that the revenue could be anything between sort of 18 and 25 million next year, which if you compare them to similar companies, their revenue should be around, their market cap should be, if they can get the revenue to 25 million, the market cap could be about 250 million. That's if you compare it to similar models. However, the Australian market don't really get MIGME, but over time I think it will. And as Stephen Goh is a really capable, he's great, he's a fantastic CEO, and I think he's very capable, and over time I think he's going to get MIGME working for us. It doesn't mean that these micro caps can be really volatile. And there's no volume in MIGME. I mean, we could have a pullback. This could potentially go even lower. But I think if you're willing to stick at this and give it a year, I think MIGME could be an absolutely potentially be a fantastic story. GEM again. This is a company we like. It's come down. It's held that sort of long-term 200. It's bounced off it pretty well. It gives a good dividend. I mean, if you're ever going to have a blue chip, a story that could be around in 10 years, I think obviously children's kindergarten's always going to be here. We're always going to have kids. This gives a good dividend. I think it pays quarterly. We really like the company. I think if you've got a long-term view and you just want to have basically a stock that's giving you a decent dividend, I think GM is absolutely fine. The reason it got sold down is that the market didn't like it. They got this big fear it could be another ABC. They didn't like the way it was suddenly sort of getting a little bit aggressive in the acquisitions. But however, with these, even if interest rates do go up, they're still going to be very, very low, compared to normally. And I think this companies are certainly. I'd like to see it above this sort of 350 level, but I think again for a long-term play, I've got no issues with it. It's excellent. As with obviously BAP, this has been one of the sort of great growth stories on the ASX 200. It's come back. It's flirting with this sort of long-term moving average, and like a lot of companies are, the recent price action we've had recently on the ASX 200, a lot of companies have done this. So it's just behaving exactly like a lot of similar companies that are sort of been trending up pretty quickly. And again, this is a good growth story, and I think the potential earnings growth. I think over time, we believe this company's only going to go higher. APN Outdoor. We're sort of quite familiar with the sector. I think it's an exciting sector. Our preferred play is QMS. We like it. We think QMS is more of a takeover target. I think this it got sold off a little bit too much on their sort of earnings report. I don't like the chart. I'll be honest. I'd want to see it trading back over that sort of 575 570 level, at least 577. I'm not. Yeah, I think I'm not a. I just don't like this price action. For me, I'd rather buy this when it's up here. Um, you know, just have a look what you paid. You paid. You've done really well on this stock. You've managed to pick a bottom, and not you've done the hardest thing on the planet, picking a bottom. I mean, you could even look if it's jumped up to like a sort of 570 level. You could even get out and take a profit. And I know it sounds crazy, but buy it again when it's over $6. Take the easy money. This is this is hard. It's hard to pick this because fundamentally, I think the story is starting to get a little bit more tired. ACU, activistic. Just be warned, we like the model, so do Google like this. Again, it's really done nothing for a while. It's sort of poked its head up. It's starting to look good. Obviously, Microsoft and Google, I think it's a great business model. It's got potentially great growth. It doesn't matter. This company is going to be really volatile. I wouldn't be looking at the share price of this if I could, because as you can see today, it's had a weak day. This thing can be up and down like a yo-yo. There's going to be a lot of profit taking, a lot of mums and dads just trading this. Hopefully, though, over time, if you give this stock a year and a half, I think over time they're going to be growing their revenue. They'll be going to be growing their customer base as they are, and over time, I think this could be a great little micro cap and one that could do really, really well. Again, I do feel with these micro caps, MIG, ACU, generally speaking, you need to give them a little bit of time. If you want to try and trend them, that's different. But I think a lot of them just need a little bit of time, and often you find when they move, they can go up very quickly and very, very fast. So we do like the story of activistic, and hopefully over time it should do really well for you. But like I said again, Bill, really welcome to Equity Story. If you've got any questions, just send me an email, or you're just not too sure about a company, or you're thinking one maybe that we don't know, or we're thinking of getting in, just send it to us and we'll have a look at it, and we'll get back to you as quickly as we can. Hopefully we'll talk soon, and good luck with everything. Thanks, Bill. Bye bye.